Hey everyone, how's it going today? We're going to talk a little bit about CPI, but just give me a minute to get everything all set here. All right. Hope everyone is doing well out there listening to this. So we're going to look at what's going on. I'm going to just shift over to my presentation here, so give me a moment. There we go. All right, so this is a presentation for Bookmap. We do this every Tuesday at 9 a.m. and it's really about finding coalescence in the markets where that can offer opportunity. And it's also about talking about what's happened, why it matters. Today, we got a big CPI data point that the market is looking at with a lot of importance and probably rightfully so. So, we're going to talk a little bit about that as well. A little about me. I'm an experienced trader and investor. I started this game in 2005. I've been trading since. I started investing in 2006, navigated my way through the great financial crisis, learned a lot along the way. And I continue to love finance. I continue to love economics, and I continue to keep an open mind, and I enjoy learning quite a bit. And so if you're interested in more about what I'm up to, you can find me at Traderade.com. This is where we help you sharpen your trading edge for short to intermediate time frame traders of all skill levels and backgrounds. We also have a lot of unique tools, some of which you'll see during today's presentation, visualizing the options markets and beyond. Now, there's also my project, which I'm really excited about, Macrovisor. This is where we make macro actionable for folks. So we take the big picture, we look for trends and thematic investable themes, and we discuss them and share our research there. You can find me on YouTube as well at youtube.com/@mayhem for markets. And, if you're interested in Bookmap itself, you can get up to 40% off by visiting traderade.com/bookmap. So let's get right to it. And if you're not aware, you can actually see the feed. The visuals on this presentation are available on YouTube. So if you click on my Twitter, the pinned tweet actually has the YouTube on it as well. Okay. So just in case folks want to watch it there, you've got that option. So let's do everyone's favorite part. This is where I read the disclaimer text. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Love it, right? So we got CPI today, and it came in well below what all the forecasts were. Headline came in at 3.2 versus 3.3. Year over year. Monthly came in at 0 versus a forecast of 0.1%. Core CPI came in at 4% year over year versus a forecast of 4.1%. And it came in monthly at 0.2% versus 0.3. So there's a lot to like in this report, led lower by energy year over year. That was the big loser in the report. We still do see some increases in shelter and transportation. You can find a little thread about that I wrote on Twitter if you'd like to see more. But nevertheless, we can see pre-market. This market is very excited about this news. S&P is bid up 1.3%. NASDAQ's bid up 1.7%. Even the Dow's getting in on the action, up over 1% here. And we have the 30-year bond futures also rising up over 1%. So really across the board, the market's giving this CPI clean bill of health. The dollar's getting sold down about 0.75% here. So what does that tell us? It tells us there's a sigh of relief here. There's a sigh of relief. The market feels better about this data and the trend that is happening in CPI. It was really kind of on the line in the sense that if core CPI month over month came in hotter than expected, that could have caused the exact opposite reaction of what we're seeing right now. So the market's really focused on this, and I think it's important for us to kind of digest, unpack, see how this market trades, particularly after the cash open and for the first hour. We'll also get PPI and retail sales tomorrow, which will be pretty important data points. And then for everyone that loves Fed speakers, it's one of the best weeks ever. There's like 20 Fed speeches this week. So if you love Fed speakers, this is absolutely the best week of your life. So let's talk about some of the things that could feed into further upside here, because I think it is interesting. We are in an environment of positive seasonality. We do have a lot of flows here that could continue to add. We've had this sort of bull flag breakout in the S&P and the NASDAQ. We're adding to that momentum after that big breadth thrust that we had, and we still have reasons to look for further upside in the near term. One of them is that corporate buybacks are back in a big way. And this is important because this is one of the big sources of inflows that provide a bid under the market. So we can see the rolling 5-day corporate buyback estimate is just absolutely going to surge here into the end of the month. That's pretty good for the stock market. We're out of that blackout period because we've gone past peak earnings season. So that's one area to just keep in the back of your mind, that these buybacks, particularly in the larger companies that have authorized, I think 2023 year to date is the third largest year of authorizations. Remember, of course, an authorization doesn't mean the company has to buy their shares, but it gives them the optionality to do so should they wish. And we're now in a period where we'll see if the rubber meets the road, but in all likelihood, it probably will. Next is the flows from equity mutual funds and ETFs. They almost always get a good pop in November. For the money managers, one of the reasons is that they're kind of topping up these retirement accounts in November as they prepare to close out the year. So you can see December is comparatively subdued. This is important to keep an eye on as well, because this is another one of those factors that feeds into that implicit bid. Right? So just something to keep in the back of your mind. We know the buybacks are happening. We also know there's these equity flows. We also have CTAs based on this model from Goldman that are extremely short this market. Systematic traders also extremely short this market. So they have some buying that they're likely to do. And that's important to factor in as well, because we've certainly seen a momentum shift, right? These are momentum traders. So when we see a momentum shift in the market, they're likely to start cleaning up those short positions and even getting long. And I think there's something between 60 and 70 billion dollars worth of buying for them to do in S&P. So that's no small amount over the next, say, 3 or 4 weeks, assuming this momentum continues. They would be another party at that marginal bid. And then we have skew. And skew matters a lot more because we are in OPEX week, and skew is, well, it's rising again. So it gives those flows, those delta and theta decay or Vanna and charm flows, a bit of an extra boost as we get into this trading day and really the next several trading days leading into Friday, which is monthly options expiration. So we know we have a number of these constructive flows that are adding to the potential for further upside here. We've also made a pretty good technical push, as I was mentioning earlier. And this morning, the implied open is above that wall of calls at 44.50, which we'll look at in just a little bit on the YouTube stream. So that could also help to further unleash a bit of upside. So here we are on that same screen talking about 4,400 below us being a pretty important level. That would be the vol trigger. That's the largest area of gamma positioning on the chain. And above us, 4,450. And, you know, if we open the way that we're likely set to open here, you'll probably see a lot of these call buyers cash in and rotate to 4,500, particularly as we're in that monthly options expiration period. I would expect they move that wall of calls higher, unless we're, like, you know, cleanly rejected at the open, which seems like a low probability scenario to me. So these are two levels to watch pretty closely. We are back in positive gamma territory now, which just gives us the sense that perhaps there's going to be more buying of dips, more selling of rips. It's a volatility compressing regime that we're in. This has to do with dealer hedging dynamics where when they're long gamma and how they change. So just something to take into consideration. And one reason that realized and implied vols could be subdued for a little bit here. Now let's zoom in a little bit. These charts are all from Traderade. These are generated every minute throughout regular trading hours on our website and our Discord. So everyone's able to access these full chain as well as 0 DTE charts of similar information. And then we have our handy dandy bot Gur, who's generated these levels. You're welcome to screenshot this if it's helpful to you. These are the S&P levels that we're watching based on the algorithm we use to analyze the CBOE and all the positioning across the chain there. That gives us the gamma flip level of 4371. So, we're implied at an open of about 100 points above that. Now, the effect of gamma exposure, it's going to peak probably around 4,500 or so. So probably won't get more and more of a vol compressor much past that level, at least based on current positioning. And that is also an area to watch where I think maybe we'll start to see a new wall of calls form based on the price action today. Now, when we're looking at the number of stocks in the New York Stock Exchange that are above their 20-day moving average, it is quite a lot. We're over 60% here. We did have that big push over 70% last week with that breadth thrust, and this is still good territory for longs in single stocks. Now, what's really interesting and what I'll be very interested in watching the trading today is that hedge funds have absolutely been piling into single stock shorts. I mean, they're just all over the map on these. And I think that's where there's going to be some very interesting opportunities in some of these really, really aggressively shorted names that have a long, number of days to cover. So, looking at stocks that have over 20% short interest, over 10 days to cover, floats that aren't too much bigger than 50 million shares, there could be some squeeze opportunities there. And if they're optionable, often is the case that squeeze will be effectuated with unusual flows of calls. You'll see those start, and then you'll see the dealers hedging by buying more and more shares, and then it starts to force shorts to cover, and it becomes a bit of a momentum play. So be looking at some of those over the next week. I know in October, some of the most shorted stocks had an incredible bid. They were up about 14%, Goldman's most shorted basket on the month, and yet hedge funds continued to pile into shorting single stocks even more. They are going more long in macro products index and other types of ETFs, sector ETFs. But looking at some of the single stocks that have unusually high short exposure, I think is interesting in this particular environment. If we look at the 50-day moving average on New York Stock Exchange listed stocks, it's still an impressive push higher. We were below 16%. We got well above 40%, even 50% last week, and we're just sort of hovering here. So again, there's a lot more stocks above that key 50-day moving average in the New York Stock Exchange. That, again, gives us a little bit more of a sense that there is some room for continuation here. Now let's look at the S&P futures directly here. This is a chart from TradingView, and it's one I've been sharing periodically. As there's updates, we can see relative strength is on the rise. So that's good. That's exactly what we like to see for a healthy uptrend, is that relative strength rising here. We also had this push above this point of control that we're looking at, just a multi-month point of control. I know some are drawing it down here when we're looking at year to date, but if we look at that multi-month point of control, that's important too. We've had that push above. We've also had that breakout from the bull flag. So these are two things that tell us that this market could have room higher. In pre-market, we're also pushing above this lower volume node area here, which is telling us that buyers want to push us into this next area of the auction profile, which gets us around 4,500 ES. And I think that's an interesting area to look at, because certainly at least what we're seeing pre-market strongly suggests we're going to get pulled into that area where market participants like to transact. The NASDAQ has a similarly very bullish look. It's pushed above its point of control. It's had this bull flag breakout. RSI is continuing to rise here. So seeing this thing revisit recent highs from the summer would not be terribly surprising as a result of this rally as well. And then we have everyone's favorite instrument to hate. We've got record levels of hedge funds short positioning in the treasury market. Now, that doesn't mean they're just shorting these things blindly. They're actually doing what's called the basis trade. So they do have a fair amount of long exposure as well. But what this tells us is that, big moves can add to volatility in this market because of that level of positioning. We just pushed above the 20. We had some more validation after CPI of that today. We're pushing further. So having a retest of this key level in this low volume node just above us wouldn't be terribly surprising. That would portend to rates falling further. And if we're able to cross that level, getting back up into this area where most of the transacting has been happening, you can see this has been a pretty important area for the market. That wouldn't be terribly surprising. That would be around 110, and that would probably bring rates around 4.4, 4.45% on the 10-year. So that would be welcome news to equities to see that continued bid in treasuries and that continued drop in longer end rates. Then we have gold. Gold is surpassing my expectations here. Maybe this is a counter trend bounce. I'm still looking for this thing to potentially retreat down to around 1916. Although I will say if rates and the dollar continue to drop, that trade's not going to work out. So it's really going to be about whether or not gold makes this push above 50 on the RSI. That would have me looking at it a little bit differently. And whether it's able to reclaim the 20 and this point of control, that would also have me looking at it a little differently. For now, I'm neutral on gold after this recent move, and I'm interested in watching how it trades today. Then we have crude oil. And this thing has been absolutely smashed recently. We saw it break below two key trend lines, its point of control, that 20-day moving average, RSI moving below 50. This area between 74.17 and 74.68 on the WTI futures contract is really important. I think if we do get another sort of flush lower, we might be having a sort of, one of these series of lower highs, lower lows. So if we do have that kind of move, it'd be interesting to see if we have a head fake, look below, and then stabilize above. That's kind of what I'm looking for based on this pattern. We'll have to see what actually ends up playing out, obviously, but that would have me interested if we have that look below and we actually are able to get into this area of low volume and then push back above. I would be interested in taking some short-term kind of counter trend longs in crude on that. So let's go into Bookmap here as that completes my presentation. We'll start to look at what we have going on here. Pre-market, we have the S&P 500 futures on screen here. We also have the NASDAQ, which is, as usual, pretty choppy, making a little bit of a push higher here. We've got the 10-year, which we'll watch because this is so important for the NASDAQ in particular, but the S&P as well. You can see a little bit of iceberg selling in this. Not much, about 786 contracts net, and this is a really liquid instrument. You can see pre-market, it's got 470,000 contracts in the book. Gold is continuing to push higher here. This is a healthy move. Again, we're going to be looking to see if it's able to push above its 20-day moving average and yearly point of control or multi-month point of control during regular trading hours. But you can see that buyers are pulling up this point of control, and that's certainly constructive pre-market. And then we have crude here sort of chopping along, but it's recovered nicely off its lows. It was trading down towards 76. It's at 79 today. It did have a little bit of a pop recently. Let's see if it can continue. It just tested its VWAP and seems to be bouncing from there. So far, though, this is looking relatively constructive. Now, pre-market, I just got word from my partner Aisha that Tesla is up another 5%. One of the things that I was talking about on the Traderade Discord yesterday was the unusual amount of buying that was happening in Tesla calls. It was actually rather extraordinary, and I think there was over $1 million of premium paid in a span of several hours for those calls expiring this Friday. So certainly someone knew something. Also, Elon apparently put up some of that merchandise, those short shorts, which, if we believe that that's a sign, it's a sign he wants to burn the shorts. And certainly with a rise of almost 10% in 2 days' time, that is something that's happening. Let's look around the futures complex here as well. I think it's always important to get a sense as to what else is going on. There's a lot of other products that trade, obviously. So I'm just going to pull this screen in here. This is FinViz. If you don't use FinViz, you probably should at least look at it. It's pretty neat. This is a heat map of all the futures contracts that they're tracking, and we can see what's going on here pre-market, right? You've got this huge bid in the 30-year, now above 115. This is starting to look pretty interesting pre-market here as well. You can see it's challenging a recent high. So erasing all of that angst from that poor auction that we had. So that's something to keep in mind. We also have some of these industrial metals actually catching a bit of a bid. Palladium has been absolutely destroyed recently. It's coming off those lows. Platinum also catching a little bit of a bid off of its recent lows. Silver as well joining in on the fun here. If it moves much higher, it's going to start to look a little bit bullish. And of course, the dollar is rolling over. And this pattern that we're seeing in the dollar is actually quite bearish. This suggests to me that the dollar has more room because it did just make a new multi-month low. Let's see how we close the day, but for now, this is starting to look like a bit of a breakdown in the US dollar, which would be quite good for equities, could be good for some of these commodities, would be good for likely bonds, and so it's something to keep an eye on. Of course, the interplay between rates and dollar, it's sometimes a little bit of chicken and egg as to who's setting the tone. Now, ag's consolidating a bit. I'm still bullish on soybeans here. I have been for a little bit. I think it still has room higher. This is one of those commodities that, it has a pretty healthy uptrend. If you look at it from October to present, it does look like it's trying to really make a push here. So something to keep in mind if you trade such things. There is an ETF called SOYB. The only caution I would give you on trading commodity ETFs is that if you're in the US, you're going to deal with a K1 schedule at the end of the year. Or, basically at the end of the year, you'll get it probably Jan, Feb. And if you have enough of those, it's a bit of a pain in the butt for you and your accountant to go through all of them. But other than that, there are a number of commodity ETFs if trading futures isn't your thing. And just a sidebar for those that don't know, there is a big difference between trading stocks and ETFs and trading futures in terms of your tax treatment, in terms of wash sale rules. It's more favorable if you're a higher frequency trader to trade futures. Obviously, talk to your CPA, see if that's the thing that you should do. But I would be remiss not to at least mention that because, it's a lot harder to do the same kinds of higher frequency trading in stocks and ETFs that you can do in futures, and you get better tax treatment on your capital gains in futures as well. So just a heads up, just putting that out there for those that are interested. Let's go back into Bookmap here. And we're waiting for the open, which is less than 8 minutes away. Now, if anyone has any questions, feel free to reach out. You can pop them in the YouTube chat room. You can put them in the comments on this space, or you can tag me in on the Bookmap Discord. We're broadcasting to all three places simultaneously. And let's take a look at some of the news pre-market here and see if there's anything else important to look at. One thing I like to look at every morning is Breakfast Bites, which we publish on macrovisor.com. It's a great way to start your day. Really lots of information there that I know a lot of folks spend hours, just combing through all the stuff that's happened overnight. Try taking 15 minutes instead. Have it all right there for you and ready. Aisha does a great job putting this together, and it's right there on macrovisor.com. So just a quick plug, but I think it's worth it. It's really great content. We do see a little bit of a push here in S&P, pushing above VWAP, dragging the point of control a little bit higher. Let's zoom out. If you look at the right column on the screen here, you can see all these levels under the options column. This is unique to Traderade because this is an algorithm that I developed, and I've added this input data directly into Bookmap as a result so that we can see how it may affect price interaction. And often it does. For example, you can see this key gamma level right above us, and there's so much resting liquidity on the offer there. That's not a coincidence. This is often the case that you see coalescence, and when you do, it's even more important. Those levels, they stand out a bit. And this is a tool that I will be looking at building in for other, let's say, NASDAQ, SPY, other really optionable trades, even some of the really popular single stocks like Tesla. This is a tool that I'll be building in for those as well. NASDAQ's pretty darn excited, popping and dropping as we approach the open here. And to anyone that I server mute on the Bookmap, it's no disrespect to you all, just doing it so that I can clean up the audio there for everyone else that is listening. And there is some very small chance we get a government shutdown if these guys can't figure out a budget. I'm not particularly worried about that if it happens, in the sense that I think if it does happen, it'll be resolved quickly. But I think the chances of it happening with everything going on right now are actually very low. Sort of like how the Moody's outlook downgrade was a massive nothing burger, which is exactly what I was saying on Friday as soon as it came out, and there was folks saying, "Oh, we're all going to die." I mean, it's nothing. It's just basically them saying, "Look, there are some risks. Y'all need to pass your budget. You need to stop spending on stupid stuff. You need to stop the saber rattling." Obviously, we know those things are probably going to be a mixed picture in terms of the progress that our legislature makes. But at the end of the day, Moody's, downgrading the outlook has no real material effect on anything. They downgraded our credit rating. That might have an effect for a little while. But again, markets tend to look past this sort of thing, and U.S. sovereign is still the best dirty shirt in the shop, right? So if you think about it, if you're going into a neighborhood and there's three houses, because this is kind of like the three biggest markets that issue debt, you've got the Eurozone, and it's smoldering. You've got the Japanese economy, and it's starting to do better, but it's still a house that's on fire. And then you've got the U.S., and it just needs a paint job. It needs some new floors, maybe a new roof. And the reason I use that metaphor is that's what keeps bringing people back to U.S. assets. It's not that everything here is great. It's not that the situation with the U.S. Treasury is amazing. It's that it's less bad than what we're seeing in Japan with their 260% debt to GDP ratio, or what we're seeing in the Eurozone where they're teetering on recession. So that's one of the reasons that, U.S. assets remain attractive. The other is that, quite frankly, most of the most attractive assets are priced in dollars and are in the U.S. Our stock market is the biggest in the world by a lot. In fact, Apple itself, just Apple, has more capitalization than the stock market of Italy. Just as an example, it's pretty wild. Microsoft has more market cap than, I believe, the stock market of Spain. I mean, you think about how extraordinary what's happened in U.S. markets are. And sure, you can argue there's a bubble, and there is. But, we got to dance while the music's on. And right now, the music's playing pretty loud. Let's see, we got less than 1 minute until the open here. We've got liquidity building up above us here on S&P futures. That tends to act a little bit like a magnet when trend is your friend. So trend is our friend. We can see point of control stair-stepping higher with price. Wouldn't be too surprised to see buyers absorb a lot of this liquidity above us post-open. Let's see how it goes. NASDAQ, a bit of a similar look on this one. Remember, this is a much less liquid contract than the S&P. So it's important to take that into context. When you see a 100 offer above us, that's actually pretty big when NASDAQ book depth is just over 10,000. So that tells us we should be paying attention to these resting bids and resting offers of size, right? You've got a 224 bid at 15,790 as well. That's important. And there's the bell. NASDAQ right off the bat is testing that point of control. Let's move over to S&P, which is starting to push higher into this area of resting liquidity. Let's see if the buyers can absorb that. They just did. So seeing that sort of idea of some level of absorption right into the open is playing out here. Buyers absorbing these resting orders really without any problem at all. You do see institutions layering into this. They've taken off about 2,300 contracts into this strength. So it is worth watching that. Doesn't mean that it's over, but it's at least something to take note of, that sort of passive selling into strength. Let's see how we're doing over at the NASDAQ. NASDAQ, similar look, took out some of that resting liquidity above, but look at that huge offer and bid. There's a pretty big amount of liquidity. This is not typical that you see this in the NASDAQ, so we'll be paying close attention to that. We see the point of control getting dragged just a bit higher here. Let's check on our friends over in the 10-year rates. Rates are coming down as futures are bid above the point of control and VWAP here. Some distribution, though. Now, actually some selling that's at least noteworthy, where you have about 4,700 contracts being sold for ZN. Not huge, but noteworthy. Let's take a look at gold. Gold is rolling over a bit after the open, under the point of control, which just got dragged higher by the buyers here. Let's see if we get any support at VWAP. And finally, we've got crude. Crude retreating below 79. Little bit of institutional buying off these lows here. We'll go back to the SPOOs, as we like to call them. We've got 279 just above at 44.90. We'll see if that gets taken out. Looks like it will. Buyers very much in control of this so far. And there you go. That resting offer absorbed. And we're seeing them above us here. We got 4,500 and 44.95 with decent amounts of liquidity there. We also have a new resting bid here at 44.75, probably moving down from that 44.80. Sorry about that, folks. Spaces are going to space sometimes, and so it did. Anywho, we have a pretty interesting open overall. We took out all that resting liquidity that was above us, that big chunk. I mean, there's about like 1,200 plus contracts in that, so it's noteworthy. But we still do see institutions selling. You can see that in the subchart here. Those are the icebergs. That's from the MBO plugin on Bookmap. I like tracking it both on screen and on the subchart. I do clean up the on screen. I don't want to see every single tiny iceberg. I like to see them of size. I like to see them of unusual size. So that's really all you're going to see printing on screen. And this is a feed, by the way, without the options, without the subchart, but you can get it on YouTube if you want all the bells and whistles, including the options feed. We have that on the Traderade Plus Discord. So you can always check that out there. Getting a bit of a bid back as we challenge that point of control to the upside. We have a little bit of liquidity appearing above once again. Pretty chunky. And that tends to act like a magnet when trend is on our side. I like to reemphasize that because it's really important to understand these dynamics. I know a lot of folks think if you're looking at the order book, if a big order comes up above you, it means, there's this wall, they're going to sell into it. It's not going to get there. People are going to run away. It doesn't trade that way in the S&P. It really doesn't. And often is the case in other futures contracts, you have that similar kind of magnetic pull. And the idea is in auction theory, if you've got this liquidity that wants to be released and the market isn't incredibly liquid, then the auction's going to look to release that liquidity. And certainly we're seeing some of those dynamics play out today. $44.95 resting offer is getting a little chunkier, about 280 up there. That's grown over the last several minutes. Let's move over to the NASDAQ, see what's going on in our favorite high beta beast. It is pushing closer to that 15,850 level. That is where there's 290 on offer just above. And we do see, just like with the S&P, some degree of institutional selling. That iceberg subchart falling. Negative 2,500 contracts is pretty big for the NASDAQ. So there's definitely institutions taking some profits here, maybe even layering into some shorts. Doesn't mean that we take any immediate action looking at this, but it does mean we take a note of that. I would be more concerned if we saw a lot of small trader shorts getting blown out as those icebergs were selling into it, but we're not quite seeing that dynamic. Big trade just happened in gold. I'm going to pull that on screen. Wow, look at that. Someone bought 100 contracts of gold, just came up in my ear. I've got alerts for that. And you can see them pushing right into that large area of resting liquidity above. So once again, a large area of resting liquidity acts as a magnet when trend is your friend and pulls price towards it to release that liquidity. Gold, like the NASDAQ, not very high book depth, right? On this contract, you can see it's less than 8,000 for the front month on gold. So when you see 141 on the offer, it's meaningful. That's like 2% of the liquidity just kind of sitting there asking to be to be transacted. So important just to contextualize this. This is how I like to use Bookmap. It's one of the reasons that I think it's really helpful is because you can really see these dynamics, and you can see in gold, liquidity is building above us. Look at that heat map up there. You can see it, and there's not much below. That suggests that price has more room to rise higher from here. See how crude is doing. Just sort of chopping sideways here. Not a lot to really do in crude. So we'll go back to the S&P. Oh, look at that. You've got 595 at 44.90 just above. And remember, folks, this is OPEX week, which means that a lot of the theory that we might use to trade, a lot of the systems and approaches, they may not work as well because you have huge parties that are basically price insensitive in the sense that they just have to move positions. They have to roll positions in the S&P, in their single stocks, in their ETFs, and any of the options that they have. They have to roll positions in the VIX. We've got VIXpiration tomorrow and monthly OPEX on Friday. Why am I saying all this? Because it just means it's a good time to be a little bit more cautious. You're likely to have volatility that is less related to key levels being breached to the upside or downside. And I think that's something that should give us just a little bit of appreciation for risk management, even more than normal on a week like this. And folks, if you like what you see on screen with Bookmap, you can get up to 40% off by going to traderade.com/bookmap. I say that because I know a lot of folks like this software, and we've got an amazing partnership with them. We have some of the best discounts you can get. So if you are interested, check that out. I've been using it for about 2.5 years, and I wouldn't go back to a world where I don't use it every day. That's just me. Although I will say my partner Horse is the same way. He uses Bookmap every day. We both use this options visualization tool that I built as well to shape our trading, and it's quite handy to have that in as a part of the total system as well. Now, the options visualization system is something that I'll eventually add to the Bookmap marketplace, but for right now, it's exclusive to Traderade Plus. So let's see, we've got that 368 at 4,500, having just taken out that chunky offer at 44.91, 44.90. I'm sorry, and then we've got 44.95 at 269. So again, with S&P, within proximity to price, liquidity is largely above rather than below. NASDAQ looks like it wants to try to challenge this upper level. Let's see what happens here. This is pretty interesting. Again, you don't often see this big of a resting offer in NQ. So it's noteworthy. The Russell is absolutely surging up over 3% now. So there is definitely some element of both that excitement where you see folks piling into calls. IWM had some of the largest call flows we've ever seen recently. But there's another side of this as well, and that is that there is short covering, because if you look at hedge funds and their positioning dynamics, not only do they favor shorting single stocks, but they also really like to short the Russell as a part of their trade. So seeing the Russell bid up as it is, you probably have some hedge funds that are flattening out that part of their book as well. And we're continuing to grind higher on S&P. We still do see more institutional selling. These are these iceberg blue diamonds that you see above. But buyers seem willing to absorb that pressure and continue to push. So seeing this move higher potentially to something like 4,500 would not be terribly surprising. Still waiting for the most active options levels to come in. However, we'll see what that looks like once that prints. We give it a little bit of time post-open to really see where the activity is, and then it'll automatically come up on screen, and then it's also available in some of the charts that we produce as well. And pretty cool, just as a sidebar, I'm working on a extension to this tool. Right now it's focused on like, S&P cash, SPY, and triple Q. I will be adding both full chain gamma tools as well as zero DTE gamma tools for all single stocks and ETFs that are optionable in the US. So that's something that I'm working on that I expect to have available before the end of this year on Traderade Plus as well, which will just be built through that bot GUR that I have on the Discord. Should be pretty cool. And then eventually those levels will be something we can export to any chart software that can import levels. So, TradingView, TrendSpider, perhaps Motive Wave, Sierra Chart, all that kind of stuff. So you can have those options positioning levels right on your chart, sort of like what we're doing here on Bookmap. So they took that 44.95 offer, right? You can see that's no longer on the heat map, now pushing up to 4,500. And again, liquidity is acting as a magnet. See a little bit of a sell. Look at that. NASDAQ pushed through that key level, 15,850 absorbed. We were talking about that level pretty much all morning since we popped Bookmap on screen and looked at the NASDAQ. And buyers took it right out. No problem at all. That's a good sign. Let's see how we go from here. And we didn't see a lot of iceberging into that, which again is another good sign. I think that tells us that perhaps buyers are really taking control of this thing, willing to absorb the selling pressure, and sellers are starting to pull back a bit, no longer layering that passive selling in on these moves, these pushes higher. We'll zoom out a little bit. We don't see as much liquidity stacking above on the NASDAQ, but there's some. S&P, that 4,500 level remains really important. I would be very surprised if we don't fill that order. The Bank of England's pill, which is, I believe, one of their voting members, has said we may not need to move rates further. Barkin striking a somewhat similar tone, basically saying that the impact from higher rates may be lagged. But he also goes on to say, I am not convinced inflation is on a smooth path down to 2%. And the Fed, being as data driven as they are, probably wanting to see just a little more data before they start talking about potentially being done. See if there's any interesting things going on in the world of unusual options flows. And 4,500 pretty much looks like it's in the bag at this point. We're just two handles away. That might kind of be the extent of the upside move that we see here in terms of seeing 4,500 get filled and seeing the NASDAQ fill that huge order at 15,850. Let's see what the options tell us when we get those most actives in, but this is already a very impressive move. Seeing a little bit of consolidation here in the 10-year futures. Gold still has that liquidity resting above. It's below its point of control here, just fading after that powerful move higher. And crude's rolling over just a little bit, but it had a nice push, and it's actually started to pull that point of control higher. So after that period of consolidation, it made a nice little push higher. Now it's consolidating that gain. Let's see what happens from there. But crude moving higher tends to put pressure on rates to move higher as well. You know, the 10-year rate and the price of oil tend to have a reasonably strong positive correlation. So if oil moves higher, rates could move higher as well, particularly above 80, probably catch a lot of people's attention. And we can see that resting offer at 80 actually thinned out quite a bit on the CL contract. And there's Spoos right there taking out that 4,500 resting offer. As we've been talking about for a while, that was a decent chunky offer, and magnet, it sort of becomes a bit magnetic when you see an offer that big in a positively trending market above us. It's likely to get filled, so it did. The most active call right now is quite a ways above. It's at 45.13 with 2,000 traded there, and the put call ratio as well as the volume on that call favors that being a more important option to watch than the put right now, which is going to be around 4,400 ES. But these initial levels, usually I like to give it a little bit more time to see how they kind of fill out. I'm more interested in watching this most active call in the present. And again, that's around 45.13 on ES. We're translating those SPX levels dynamically. So, if you were long into this and you made a good chunk, it's not a terrible place to take off core, leave runners on for any potential further upside. But after the magnitude of the move that we've seen, I would be cautious looking for further upside from here today. That's not to say over the longer period of time we can't get more. I think we certainly can. But today, we might be close to the end of that kind of momentum we're seeing here. Maybe another 13 handles, 15 handles in S&P higher. NASDAQ, similar, kind of consolidating around this 15,850 level. Still seeing that institutional selling into price pushing higher. Negative 3,000 icebergs on an order book that only has a depth of about 10,000 contracts. So again, passive selling on the NASDAQ is reasonably noteworthy. Rates continue to consolidate here. There was a decent iceberg buy, 6,000 contracts on ZN. And gold is continuing to move a bit lower here. It's an orderly decline from the area where it reached, kind of pulled that point of control higher and then couldn't push into those areas of resting liquidity above, at least yet. I'd consider this more of a rest than a trend change right now. And crude coming back down, testing that point of control, and we're seeing some resting bids below us start to build just a little bit, but we have plenty of resting offers above. Again, this is another really illiquid order book. This less than 5,000 contract book depth. That just means it doesn't take a lot of volume to move price quite a bit. It's one of the reasons crude can be quite erratic to trade. The Fed's Barkin says we're not in a recession right now. I would say that is an accurate assessment, although very kind of on its face obvious statement as well. That most active call at ES 4513 is growing. 5,000 now exchanged there. It remains the most active option on the SPX chain, and put call ratio continues to see more calls transacted than puts. That in turn can favor a bit more upside, that dynamic. That's one of the reasons this tool can be pretty handy. Just having a quick glance at sort of the flows that are driving price discovery. And if we talk about zero DTEs, there's over 650 billion of notional traded in SPX zero DTEs every day. The whole complex, it's about 1.3 trillion of notional trades. So it's about 50% of all volume in SPX and all notional in SPX is trading zero DTE. So these options are being bought with 6.5 hours or less to expire. It's pretty extraordinary, and it does have a big impact on intraday price discovery, and we see it often. Do see a little bit more institutional selling on the S&P. There's about an 839 contract iceberg. You can see that on the subchart. Nothing huge, but worth noting where they're selling, just around that 4,500 level. There's more appetite from sellers here. And just got our first unusual options flow for this morning. It's IWM, wouldn't you know it? And these are calls for a 180 strike expiring December 1st with premium of 141,000 paid. So we're kind of continuing that dynamic of seeing really aggressive call buying in IWM. We also have some smaller calls happening in favorites like Tesla, Nvidia, and a bit of Adobe. On the other side, you see some hedging flows in the Dow Diamonds ETF for the strike of 347 on the put side, about 54,000 in premium paid there. Nothing too big. Also, some put buying in SLV, 57,000 for the 21s expiring this Friday. The Dow was also this Friday. Really, a lot of the put buying is just very short dated here. I don't know why this headline is being listed as important, but I'm going to read it for giggles. Kevin O'Leary says that we should ban China stock listings in U.S. markets. And it's not that I completely disagree with what he's saying. I just don't think that anything he says is worth listening to. But I'm saying it because I find it amusing. So I've got about just a little bit over 3 minutes left. Let's just take a quick look at the S&P 500 heat map here as we round out this stream. And remember, I'm here every Tuesday, 9 a.m. to 10 a.m. Eastern. And I really enjoy doing these. I hope you guys enjoy listening in. This is exactly the type of thing that we do on Traderade regularly on the Discord. We have streams. We talk about what's happening in the trading environment, what's happening in the bigger picture. We look at opportunities in single stocks, industries, sectors, different asset classes entirely, and over different time frames from day trading all the way through swing. So on screen, we've got the S&P 500 heat map. Amazon up 2.81%, Tesla up 4.53%, Adobe up 2.77%, AMD up 3.53%, Intuit up 4.25%. Tech really showing some strength here. Real estate as well, though. Some pretty good bids in real estate. Utilities lit up green. The breadth today is good. That's really the takeaway here, is that the positive breadth today is quite healthy. And this is exactly what we want to see to get a sense that maybe there's some room for continuation. If this was a very narrow rally and it was just led by a handful of stocks, I would be concerned about its durability. But the fact that it's actually reasonably diversified, that we have that positive breadth across a number of different sectors, energy is not participating quite as much, healthcare quite not as much, insurance not as much, but the rest of the S&P 500 sectors look pretty well bid. So I've got less than 2 minutes left. If anyone has any questions, feel free to ask as we round this out. If you don't get to ask during the stream, you're welcome to tag me in on Twitter and ask, or reach out. Otherwise, you can tag me in on the Bookmap Discord server in my channel, or you can leave a comment in the chat. But I want to thank everyone for tuning in. These are always a lot of fun to do. Really appreciate your support and checking out what we're doing here. And one last time, I'll just say, if you like Bookmap, if you're interested in this product and see the value, you get up to 40% off by visiting traderade.com/bookmap. And the only reason I endorse them, and you don't see me endorsing a lot of other products, is I actually use them. I love the product, and you can see how valuable it is with this kind of interaction, with how important resting liquidity is for price discovery. So thanks everyone for checking this out. Remember, there is a Bookmap stream on YouTube with just the basics, doesn't have the options levels or the subchart. We've got the fully featured stream over on our Discord server as a part of the Traderade Plus package. So thanks again for tuning in. Really appreciate it. And I'll be back next Tuesday at 9 a.m. Eastern. I'll see you then.